Your market news now. Global stock markets are trading mixed as investors look for fresh catalysts. While the JSE is firmer, market gains locally are in the precious metals, resources, industrial metals, as well as the food producers. Meanwhile, retailer Woolworths expects its half-year profit to fall due to consumers pulling back. This update contrasted with pharmacy chain Clicks Group, which reported that its retail sales were driven by strong festive season. Meanwhile, U.S. corporate earnings season continues this week. Netflix will release their earnings after the market closes. Oil prices eased slightly as traders weighed the simmering geopolitical tensions in several regions. To give us more perspective on the markets, we are joined by Han Ten, who is from Xfinity. Han, thank you so much for your time. I mean, we're in this range-bound movement when you look at global markets, but we're also seeing the same picture locally. How would you describe market sentiment right now?
Yeah, and I think that's a very astute observation there, Nastasia. Look, I think markets are taking a bit of a pause right now. Essentially, investors are waiting for further evidence to justify some of their preconceived notions, right? So, in other words, they want to see if reality actually matches up with some of their forecasts. So, be it what central bankers will do, or what happens on the earnings front, or even on the geopolitical front that you mentioned earlier. I think there's a bit of a pause overall, and we're seeing that across asset classes.
I want to talk about the Bank of Japan because we have been looking forward to this interest rate decision. It kicked us off a whole host of central bank meetings for the week. How did the market, especially the yen, react to what happened at the BOJ?
Yeah, so in short, the reactions in the yen were short-lived, right? I think it only shows that, traders are just so eager to latch on to the slightest clues that the Bank of Japan is ready to hike. And to be fair, there were some clues, out of the governor today, but it wasn't as overt as some traders would like. And that's why the Japanese yen very quickly gave up some of its initial gains, right? So I think overall, the Bank of Japan is warming up to the idea of a rate hike, but perhaps it's not coming as soon or as overt enough than some of these yen bulls expected.
Apart from that, investors are still going through corporate earnings. When you look at the bulk of the bank earnings that we got last week, what would you say is the common theme when you look at them?
Yeah, so it's perhaps cautiously optimistic, but at the same time, like JP Morgan had alluded to a couple of weeks ago, I think much of their earnings growth are in 2023, right? So looking ahead to 2024, there is still this debate about whether the US economy will hit a soft landing, right? Or could it actually be tipped over into a recession, right? So I think that dilemma is certainly feeding into the share prices of some of these banking stocks. In other words, if the Fed can do a good job with its monetary policy pivot, that should at least create a supportive environment for banking stocks.
Tech earnings kick off. We've got Netflix reporting after the US market close. What's the market looking for when we have these tech earnings?
Yeah, so I would actually extend it beyond just Netflix. I think overall for the tech sector, it's still very much an AI-driven story, right? So keep in mind some of these record highs that we've seen, for the likes of Meta, Facebook, for example, right? It's almost priced into perfection here because markets are expecting double-digit earnings growth every quarter between now and the first quarter of 2025. So those are lofty expectations to live up to. So if these tech earnings can deliver on the AI hype, then again, that should create a supportive environment for US stock markets as well.
I want to take it back to the central banks here. We had the Fed officials last week who were pushing back against any idea of early rate cuts. We know they're in a blackout this week. Is the market believing some of the rhetoric coming out of those Fed officials?
Somewhat, right? You did see the pushback having an effect on currency markets, on gold, etc. And look, policymakers have to maintain that hawkish line, right? Otherwise, if financial conditions loosen too much too quickly, that will just undo a lot of the tightening that policymakers want to do. Having said that, I think markets are aware that policymakers and investors will all be very much data dependent. So if the data really opens the door for the rate cuts that are expected by the Fed this year, then I think markets are more than willing to price those in.
Speaking of data this week, we're expecting US fourth quarter GDP as well as the PCE figures. From your perspective, what's more important for you? Is it the corporate fundamental outlook coming out of these US companies, or is it the macro picture?
Yeah, I think the way I would describe it would be the macro picture frames the corporate earnings, right? Also keeping in mind that the numbers that we're getting out of Wall Street are backward looking. So it's more about what these C-suite actually say about their expectations for earnings moving forward, right? And I think that is very much influenced by the what the economy is doing, unless that is if you're in that AI mania bubble, so to speak. So again, I think to answer your question, it's what the Fed will do and its impact on the economy. I think that's arguably the biggest driver for overall US stock indices. And then from there, you filter it down to how it will impact these individual companies' earnings.
All right, Han, let's leave it there. Thank you so much for your time. That is Han Tan, who is the Chief Market Analyst at Xfinity, and looking at the Rand right now, currently trading at 19.15. Earlier we were at 19.10, so we're still at a 3-month low, but trying to recover somewhat given the stronger dollar. However, we're going to leave it there. We're going to take a quick break, and when we come back, we'll have more news for you, so stay tuned.